All right, so our topic today is about partnership dissolution. Welcome you all. Now, by the end of this chapter, of course, you should be able to explain what happens upon dissolution of a partnership. You should be able to record the entries relating to the dissolution of a partnership. Still, you should also be able to explain the differences between recording a partnership dissolution and making the entries when one partner leaves the partnership. We are going to see what happens, what happened in the rule of Ghana versus Murray, and when do we apply the rule in Ghana versus Murray. Now, when you look at the introduction of our study material, you'll see that we are going to learn how to calculate and record the necessary entries when a partnership is dissolved. We are going to see how to apply the rule in Ghana versus Murray. And this rule is normally applied when a partner is unable to pay the amount they owe the partnership. Need for dissolution. Now, of course, partnerships are long-term ventures that are formed with a long-term commitment on the part operating a business together. But of course, these partnership businesses do not last forever. They will always come to an end. Of course, new partners will be admitted from time to time, and partners can also leave the partnership. But the partnership is not permanent. Of course, at first, it appears something that is going to last forever, but it will not last forever, meaning that a partnership is not permanent. It will automatically come to an end one time in the future. So we call this partnership dissolution. When a partnership firm ceases operations and its assets are disposed of, we refer to that as dissolution of a partnership business. So dissolution is all about the coming to an end of a partnership. In other words, the partnership business is discontinued. Okay? That is partnership dissolution. We need to know what are some of the reasons for dissolution of the partnership. Of course, a partnership is going to be dissolved in case the partnership is no longer profitable. Our aim was to start a business with the aim of making profits. But now what happens if the business is no longer profitable? Of course, there will be no any other reason as to why we carry on trading if the partnership business is not profitable. Of course, it has to come to an end. That's dissolution of the partnership. The partners cannot agree between themselves how to operate the partnership. They will therefore decide to finish the partnership. Factors such as health or old age may also bring about the close of the partnership business. Still, the partnership will come to an end in case the partnership business is converted into a limited company. This is the factor which you can also look at. In case the partnership business is converted into a limited company. Let me add this here on our points. A partnership is converted into a limited company. So if a partnership is converted into a limited company, it means that the partnership business ceases. Then we see the rise of a new business, which is a limited company. Okay? Yeah. Now, what happens upon dissolution? what happens upon dissolution. Now, what happens on dissolution is that, first of all, the assets of the partnership business are disposed of. We have to dispose of all the assets of the business. Then the liabilities of the firm are paid to everyone other than the partners. So we have to make sure that all the partnership liabilities are settled one by one. Okay. The partners are repaid their advances. The partners are repaid their advances and current balances. Advances are the amounts they have put in above and beyond the capital. The partners are paid the final amounts due to them on their capital accounts. And of course, upon dissolution, there will be a profit or loss. And this profit or loss would be shared by all the partners in their profit and loss sharing ratios. So we have to find out the profit or loss, and these profits will be shared by the partners according to their profit and loss sharing ratios, as we shall see. Remember, if we make a profit on dissolution, this profit will increase the capital repayable to the partners. And if it's a loss would reduce the capitals repayable. If a partner's final balance on his capital and current accounts is in deficit, in other words, if the capital account and the current accounts have a debited balance, then it's the partner to pay an amount of money into the partnership business bank account. That is in case we have a debit balance in the capital and the current account, then there will be a deposit on the partnership business bank account by these partners. Dispose of assets. Remember, assets have to be disposed of. When it comes to the disposal of assets, it does not mean that these assets have to only be sold to the external parties. An asset can be sold to an existing partner. Okay, so in such a case, the partner may not pay in cash for such assets, but instead they will be charged to his capital account. Instead, they will be charged to their capital accounts. Accounting for partnership dissolution. Now, the main account around which the dissolution entries are made is known as the realization account. It is in this account where we find out if a profit has been made or a loss from the amounts realized on the disposal of the assets. So if you want to find out if there is a profit or loss made, then we have to prepare what we call a realization account. Don't forget, the realization account is not the same as the revaluation account. No. We see a realization account only when there is a disposal. And we said that a revaluation account is only prepared in case there is a change in profit or loss sharing ratios of the partners, there is admission or retirement of an old partner. That's when we can prepare the revaluation account. But the realization account is only prepared in the case of partnership dissolution. The accounting entries needed when it comes to partnership dissolution, first of all, we have to transfer all the book values of assets to the realization accounts, with the exception of cash or bank. So you'll debit the realization account with all the book values of assets, with the exception of cash or bank. Then there will be a credit in the assets accounts. The amount received from the disposal of assets, we shall debit bank account since we are receiving cash from the assets being disposed of. Then we shall credit the realization account. Then the values of assets taken over by the partners without payment, we have to debit the partner's capital account and we have to credit the realization account. Then the creditors paid, we have to debit the creditors' accounts, and then we shall credit our bank account. Costs of dissolution, we debit the realization account and then credit bank. In case of any profit or loss on realization, to be shared between the partners in the profit and loss sharing ratios. Of course, if it's a profit will be debited in the realization account and credited in the partner's capital account. If it's a loss, then it's the other way around. If it's a loss, we debit the partner's capital accounts and then we credit the realization accounts. Pay to the partners their final balance on their capital accounts. Remember, we are closing the partnership business and we have to make sure that we clear off all the liabilities of the business. So in case partners have a credited balance on their capital accounts, then we have to pay these final balances to the partners. So we have to debit the partners' capital accounts and then we have to credit our bank account. If it's the partners to pay the partnership, in case of maybe a deficit, then the entry will be reversed by crediting the partners' capital accounts and then debiting the business bank account. So those are some of the entries when it comes to partnership dissolution. Remember, the final balances on the partners' capital accounts should always equal the amount in the bank account from which they are to be paid. There is a very important note there that you should always complete the capital account entries before you can complete the bank account entries. If the final bank balance does not pay out the partners' capital accounts exactly, you will have made a mistake somewhere. So from there, of course, we talk about the rule in Ghana versus Murray. We have to talk about that rule in the Ghana versus Murray. And then when do we apply that rule? Ghana versus Murray. Now, if a partner's capital account has a debit balance after the transfers of all the profit or losses from the realization account, then he will be expected to bring in cash to meet the deficiency. That is only if this partner is solvent. But there may be a scenario whereby the partner is having a debit balance, but when that partner cannot clear up that indebtedness to the firm. So what happens in such a case? Of course, in case the partner cannot pay, then that partner is declared bankrupt or insolvent. So in such a situation, we have to apply the rule in the case of Ghana versus Murray. Of course, according to that rule, the justice by then, that was of course, this case was in 1904. It was a case in England. And the court ruled that in such a situation, the deficiency of that insolvent partner is to be shared by the other partners according to their capital contribution ratios. Those are the last agreed capital balances in the statement of financial position at the end of the accounting period. Those solvent partners have to settle such a deficiency of the insolvent partner, not in their profit or loss sharing ratios, but in their ratio of their last agreed capital balances. That is the rule in Ghana versus Murray. And of course, we are going to see how we can apply that rule in the question we are going to look at. Of course, when we try to look at the notes, there is a class question, which is Pula, Pulipa, and Kujenga, that we can find this in our revision kit. And it's a past paper question from November 2016, question 3. However, we are going to stretch and look at the most recent question about partnership dissolution. So we are going to leave this of November 2016 and we look at that of August 2018 because that is the most recent question about partnership dissolution. So let me take you to our question of the day, which we are going to look at. And this question is about partnership dissolution, coming from a CPA past paper, Financial Accounting, August 2018. So there we are. I've shared that question paper. You can see that on the screen. Financial Accounting, paper 1, August 2018. Let's move straight to our question. I think that is the last question in this question paper. Yes, there we are. It's question 6. So they are telling us in this case that Wanda, Kalule, Mwambu are partners trading as Wafanya cars traders, exporting cereals to South Sudan. Their profit or loss sharing ratio is 4:1:3, respectively. And due to the insecurity in South Sudan, the partners have decided to dissolve the partnership. The following is their statement of financial position as at 31st December 2017. So we have land and buildings, plant and machinery, the motor vehicles. We have some current assets there, the inventory, the trade receivables. At the same time, we have a provision for bad debts. Remember, provisions for bad debts in the statement of financial position, they reduce the trade receivables amount. So our total assets, we have 224,000. But of course, we also have the capital accounts. We have the capital accounts where we have Wanda, Karole, Mwambu. Then we have some current accounts there where we have still Wanda, Karole, and Mwambu. But of course, you see that Karole's current account balance is a debit with a negative 24,500. Then we also have the trade payables, loan from Wanda, and then the bank. Of course, in this case, you see that the business's bank account has a debit, has a credit balance. That's why it's under the current liabilities. So the partnership had a bank overdraft of 4,000, as you can see from the question. We have some additional information there. The assets were realized as follows: land and buildings was disposed of and received 90 millions, plant and machinery 45 millions, then the inventory 280 millions. One that took over the motor vehicle at shillings 14 million as part settlement of his loan. Okay. Then dissolution expenses, we have 3.5 millions. Accounts receivable were factored at shillings 23.55 million, while Wanda took over shillings 10 million of the accounts payable, and the balance was paid off less a discount of 10%. Okay. Then from there, Karole could only manage to meet half of his deficiency before he became solvent. So there is an insolvent partner, that is Karole. So we have to apply the rule in the case of Ghana versus Murray. Of course, the examiners noted that down, that apply the rule in Ghana versus Murray. What are you required to do? Prepare for Fanya Kazi Traders as of 31st December 2017. Realization account, bank account, the partners' capital accounts in the columnar format, and then the loan account as well as payables. So we are going to see how we can come up with these accounts one by one. One by one. Yeah, so do you have any questions? Those who are online, anyone with a question before we go into the accounts? Yes, Geoffrey, do you have any questions so far?
Not yet.
Not really. So let's see how we can look at these accounts one by one. So we are going to start with our realization account. That is the first part of the question. So you will help me on the figures, find out exactly the figures we have in the question as we are preparing this realization account. So part A of the question, the examiner requires you to prepare a realization account. And I told you the realization account is only prepared in case of a partnership dissolution. So realization account, that's our realization account. So we want to come up with a realization account. Okay, there we are. That's our realization account. I believe my screen is very, very clear. We can see the account, not so? Is it clear?
Yeah.
All right. So we have the credit. Of course, you know, T account has the debit as well as the credit. And when you try to look at the question, the level of rounding off is shillings, thousands. So I'll maintain the same level of rounding off. So in this realization account, that's where we record all the transactions on realization, all the transactions at dissolution of the partnership. And according to our accounting entries, the first thing which we have to do is to debit the realization account with the book values of all assets, except cash or bank. So let's do that. Look at your statement of financial position, transfer all the book values of these assets, and you debit them in the realization account. So the first asset we have is land and what?
Yeah. And buildings.
So we have land and buildings, which is 79 millions. Then we have the plant and machinery. Plant and machinery, that is 65. Then we have motor vehicles. Motor vehicles, that is 16,000. We have under current assets, there is inventory. And under inventory, we have 41,000. Then we have the trade receivables. Of the trade receivables. And under the trade receivables, we have 23,000. Remember, we are interested in the book value. So I'll take 23,000. Why 23,000? Because we see there is a trade receivable figure of 25,000, but then there is also a provision. There is also a provision for the doubtful debts. So I minus that provision to come up with a net amount of 23,000, as we can see. Then which other assets do we have there? What else do we have apart from the inventories and the receivables? That's it. So you see, we have debited all the book values of assets on the debit of the realization account. We have debited our realization account with the book values of all assets, of course, except cash and bank. Now, on the credit, we have to look at the additional information. We have to look at the additional information and we see what is on the credit. Let us try to look at the additional info. Let us try to look at the additional information. Now, under the additional information, you'll see that the assets were realized as follows. Assets were realized as follows. In other words, these assets were disposed of, and those are the amounts we received, or the partnership received on dissolution. So those amounts realized have to be credited in the realization account. Of course, you expect this money to be deposited on the business bank account. You expect the money to be deposited on the business bank account. So let's see how to enter this in the realization account. So on the credit, I write assets realized. Assets realized. But of course, we expect to see all this in our bank account because we are receiving money. These partners are receiving money as a result of disposing of some of their assets, as we are going to see. Okay. As a result of disposing of some of the assets, as we are going to see according to the additional information. So land and buildings, they received 90 million. So I have to show land and buildings. $90 million. Then we have plant and machinery. Plant and machinery, they disposed of plant and machinery and they received 45. Inventories were disposed of and they received 28 millions. One that took over the motor vehicles at shillings 14 million as part settlement of his loan. Dissolution expenses 3.5. Dissolution expenses are debited in the realization account. So dissolution expenses, those are debited because it's a cost to the business. That is 3.5. 3.5. Accounts receivable, we have factored at 23.55 million. Okay, the receivables factored. In other words, this is how much the money to collect or the money to recover from the accounts receivable. So accounts receivable, that is 23 millions 550. Then while one that took over the 10 million of accounts payable and the balance was paid off less 10% discount. Let's first enter in the assets that were taken over by the partners. Let's first enter that. So assets taken. So we have assets taken. Assets taken. Of course, it's Wanda who is taking the assets. It's Wanda taking the asset as part of payment, assets taken. Of course, it's Wanda. So I write Wanda. I write Wanda. How much is the value of the assets taken? That is 14. That is 14,000. So assets taken. Of course, the corresponding double entry will be a debit in the loan account this time around, not capital account, because this was taken to clear up the loan. It's like one that borrowed the partnership business some money. So they have agreed that Wanda, please take over the motor vehicles At how much? At a valuation of 14 million to clear part of your loan to the partnership. So this is a 14,000. Of course, we see a discount received. The discount received is credited in the realization account. And of course, it will be debited in the trade payables account. So we have a discount received. Discount received, but of how much? That's something also to look at. How much was the discount received? They're telling us, according to the additional information, that Wanda took over shillings 10 million of the accounts payable, and the balance was paid off less the 10% discount. I think I can show a working here. We have the payables balance. Just a small working. The payables balance, that was 23.5. Then someone is taking over. One that took over the payables. Wanda clears. How much? 10 million of these accounts payable. Of course, 23.5 minus the 10 million. The balance is how much? The balance is 13,500. But now that amount was settled, less a discount of 10%. So discount. What is 10% of 13,500? That is 13,50. So this is our trade. This is our discount received. So you can look at that working. So meaning that they ended up paying how much? What is 13,500 minus 13,50? That is around
150.
That's around 150. Okay, so that is our discount received. And these are the items we enter in the realization account. The debit is the debit side of this account. We enter all the book values of assets with the exception of cash and what? Cash and bank. Then we also debit this account with the dissolution expenses. Then on the credit, you'll find the cash collected on the disposal of the assets. You'll find assets taken over. Then you also find discounts received. Now let's try to balance this account. Let's try to add the debit. Let's try to add the credit. Then we find out which side is bigger and which side is smaller. So Geoffrey, I know you're on. So try to find out which side is bigger and which side is smaller. What are the totals on the debit and then the totals on the credit? Can you do that? Try to find out. Then we'll see how we can balance up this account very fast. Then we'll look at the other accounts one by one.
On the debit side?
Yes, please.
It is 227,500.
On the debit side, that we have 227 what?
500.
We have 227,500. Then on the credit, On the credit, how much do we have?
It is 21.
It's 21, okay.
2,700.
21,
2,700.
okay. Let me put that down. That we have 21. To what?
2,700.
21 to 700. That is the amount on the credit side. How much is the difference between these?
18,800.
The difference that we have 18,500.
8.
8.
Mm.
8,500. Okay, so that's what we have. But of course, let me also try to just confirm what we have. Okay.
All right.
Yeah. So the debit side. Let me see. There is a 79,000 plus 65 plus 16,000 plus a 41,000 plus 23 and plus 3,500. Yeah, that is 227. 500.
500.
7,500. Okay. So that is okay. Then on the credit, we have the 90. Then plus the 45,000 plus the 28 plus the 23, 550 plus the 14,000 plus 1350. Yeah, on my credit, I have something different. I don't know. Yeah, I have something different.
And again.
Yeah, try to check and see. Because I have 201,900. So try also to re-add and see. Either Snail is having the wrong figure or maybe you, but try to re-add and see how much we have.
What do you have?
I have 201.
900.
Exactly, 201,900. Yeah, so of course you have to sometimes to add again and see just to be exact, okay, on what you
Right.
have. Yeah, because now if you take the other first figure, then of course it will be wrong and it may affect all your other figures later. Okay. Yeah, so that's what we have according to our realization account. The debit side is greater than the credit side. Of course, now if the debit side is greater than the credit side, of course, they made a loss on realization because what we have on the credit is what we receive. Okay. And then the debit, that's where we have the costs as well as the book values of the assets we are disposing of. So there was a loss that was made on realization. So we credit this account to balance it. Loss on realization. And this will go to the capital account of these partners. Who are the partners? We have Wanda. Who else do we have?
Carole.
Kalole. And then we also have mwambo. What are their profit or loss sharing ratios? Profit or loss sharing ratios, that they are sharing profits in the ratio of 4 to 1 to 3. So that is 4/8 times our loss. How would we get the loss? It is the difference between the totals on the debit and the totals on the credit. And our loss is, how much is the loss? Our loss is 25,600 what? It's 25,600. So can we find out the loss share of each and every partner? 4/8 times 25,600, that is 12,800. Then here we have 3,200. Then 9,600. So that is our realization. Fully balanced up. That is our realization accounts, and after that, you'll be able to get your 7 marks. You'll be able to get the 7, get your 7 marks. Yeah, so that part has 7 marks. Now, part B, we see part B, we're supposed to come up with a bank account, then the partners' capital accounts, then the loan account, and then the payables account. However, when it comes to the capital account should come before the bank account, because we need to find out from the capital account how much will be paid to the partners, or how much the partners will deposit on the business bank account. So I'll prepare the capital account first. As long as I prepare all the accounts and I name them according to the questions, no problem. But it should be the capital account first before we prepare our partnership bank account. So I'm going to first prepare the capital account of the partners, then we shall come to the business bank account later. Okay. So partners, let's first prepare the partners capital. Partners capital account.
Excuse me, sir.
Yes, please.
Now, why is it that on the realization account that we leave out cash and bank?
We leave out cash
We
and bank.
cannot dispose them of.
Yeah, you cannot dispose of cash and bank. That is an asset to the partnership account. And remember, you'll be required to prepare a cash and bank account. Okay. Yeah, so we prepare that as a separate account. Okay. Because it records all the monies that have been received and all the monies that will be paid out on dissolution. So it's prepared as a separate account. Okay, we don't mix it with the other assets in the realization account. Okay.
Yeah.
So partners capital accounts, let's try to come up with this. So we have the details here. Then we have to show the partners. Now under the partners, we have Wanda. Then who else? Caroline and Mwambu. Okay, so assuming this is our partners capital account, let's try to enter our information one by one. Then we see how we can complete this question. All right, so I'll enter. Don't forget to show the shillings. And the level of rounding off. Yeah, so that's what we have according to our question. Now it's time to enter the balances. These are capital accounts. So our capital account has a normal credit balance broke down. So you transfer those capital balances of each and every partner from the balance sheet given. You credit them one by one. So Wanda is 98,000. Carole is 20. And then Mwambu is 62,000. Mwambu is 62,000. So those are the capital account balances. So in this case, of course, we also have the current accounts, meaning that the partners prepare or maintain what we call the capital accounts. And now because we are closing up, because we are dissolving our partnership business, it makes sense to also carry on the current account balances and we transfer them to the credit of our capital accounts. So I will say current account balance. Now the current account balance of Wanda is how much? Is 15,000. Then Karole is a negative, so we have to debit that. Then in Mwambo, it's 11,000. So we come here. Current account balance. Karole is how much? It's a debit, it's in brackets. So we debit that, that is 24. That is 24,500. Of course, there was a loss on realization. So we have to show that loss on realization. In your realization account, you see that loss was credited. So we have to complete our double entry and then we debit the partners' capital accounts one by one. So on the debit, you write loss. Realization. The loss on realization for Wanda is how much?
Wanda, it's 12,800.
So for Wanda, we have 12,800. Then Karole,
3,200.
then Mwambu,
9,600.
Mwambu is 9,600. So we have entered that. Now, if we have assets that were taken over by the partners, of course, we have to do what? We have to credit. We have to debit the partners' capital accounts, those assets that were taken over. However, in this case, the asset was taken over, but this asset was to settle
The loan.
Was to settle part of the loan. We're not going to enter that in our partners' capital accounts. It will be taken to the loan account. It will instead be taken to the loaning accounts. Then, of course, as you know, we have to discharge the liabilities. In other words, we have to settle all the liabilities. And they are telling us, according to the question, that while Wanda took over shillings 10 million of the accounts payable. In other words, Wanda is to pay. Wanda took over shillings 10 million of accounts payable, and the balance was paid off less 10%. So Wanda took. Okay, Wanda is receiving 10 million of the accounts of the accounts payable, and the balance was paid off less 10%. So we have to increase Wanda's account. So we can say payables taken over. So the debit entry will be made in the payables account to reduce them. But of course, here we have to increase Wanda's account by how much? By 10. Is it 10 million? Because they are telling us that Wanda took over shilling 10 million of the accounts payable. Then what else do we have? Assets taken over, we don't have that. Loss on realization, we have entered that. Now what do we have to do? We have to balance off this account. But remember, when it comes to balancing off, one of the partners is insolvent. Who is that insolvent partner? According to the information given, that is Kalule. Okay, that is Kalule. So Kalule can meet half of his deficiency before he became solvent. So Kalule is going to pay some money on the business bank account. So I write bank, that is debit. Bank. Then we are going to find out how much is Kalule's balance. Okay. How much is Kalule's what? How much is Kalule's balance? Is it a debit balance or it's a credit balance? Let's try to find out. Let's try to find out. Let's try to find out. So we have, in fact, this should be, let's first try to balance. So can we first deal with Kalule? Try to find out which side is bigger for Kalule. The debit side is bigger. How much do we have on the debit? When you try to add the debit, how much do we have? That is 20 what?
27,700.
That is 27. And on the credit, we have how much?
We have 20.
We have just 20,000. So the debit side is bigger. The debit side is bigger. So the balancing should be, how much is the balancing figure?
It is 7,700.
The balancing figure is 7,700. Can you divide that by 2? How much do you get?
You get 3,850.
You get 3,850. So Kaule will deposit some money on the business bank account, 3,850, because that's what he can pay. The balance he cannot pay. And if he cannot pay the balance, then of course we are going to apply the rule in Ghana versus Moray. It will be the other solvent partners, that is Wanda and Mwambu, to clear off that deficiency. So how do we do that? We come here and write Kalule's deficiency. Kalule's deficiency. Or I can just write Kalule's account just because of space. But the right word would be Kalule's deficiency. Okay, let me just shorten it. Kalule's deficiency. Kalule's deficiency. Kalule's deficiency. Now, Kalule's deficiency. Let's see how much these partners contributed. Wanda paid something, and then Mwambu also paid something. The working is here. Kalule's deficiency, Wanda. Want to find out how much Wanda contributes. And then Mwambu. So Wanda, now when it comes to the rule in Ghana versus Murray, that amount the insolvent partner cannot pay, the other solvent partners have to clear that amount using their last capital contribution or capital balances. So Wanda, his capital balance was 98. So we get that 98,000. Then for Mwambi it is 60 what? 62. So we get that over the total of the two. So what is the total of the two balances? What is 98 plus 62? That is 160.
Yes.
Then times how much you want to share. These two have to clear up the 3,850. So let's find out the contribution of each towards this deficiency. So 98 divided by 160 times 3,850. Wanda contributes
2358.
358. Then Mwambu contributes 1,492. Round off this, we get 2. Contributes 92. Okay.
Yeah.
So that's how much they have contributed towards the efficiency of Karure. So we have applied the rule in Ghana versus Murray. So I think now we can balance off the other accounts for the partners. That is Wanda and Karure. Let's try to clear up their accounts. And then we finish this. We do the loan account and the partners business bank account, and then we finish. So let's try to find out, let's try to balance up these accounts one by one. Okay, so Wanda, when you try to look at Wanda, which side is bigger? Wanda?
Credit side.
The credit side is bigger because I'm seeing a 98, a 15, and then 10. So can we try to balance up Wanda's account? Let's try to see the total on the credit. Then plus 10.
123.
120. But of course, we cannot forget to show their contributions, because now their accounts will reduce because of what they have contributed to Karure. Okay. So we come here and write Karure's deficiency. Wanda has contributed how much?
Wanda contributed 2358.
2358. Then Mwambu
1492.
1492. So let's try to balance up their accounts, and then we see the balances on their accounts.
Wanda.
So Wanda, we have 123 on the credit total.
Yes.
Then Karure, what is Karure's total amount? That's the total of Karure. This is 27 what? 27? 27, 700. Then this is 70,000.
73.
Let's balance up. Now here we get the amount. We don't call them balances carried down because now these partners are going to receive. We are trying to show how much they are going to receive. Okay. After each and every, after paying the debtors, after paying the creditors, after disposing of all the assets, after clearing all the liabilities, for them, they will end up receiving. So this is the final amounts to be paid to them. So what is 123 minus these amounts on the credits? Just get 123,000.
The one on the debit because the credit was big.
That is minus 12,800. Then minus 2358. We get 10 what? We get 107. 107. 842. For Karure, there is nothing. Then Mwambu, let's work out Mwambu very fast. Let's work out Mwambu. Let's work out Mwambu.
So
73,000
minus 61908.
So here we have 61908. 908. So that is the partner's capital account. That is the partner's capital. That is the partner's capital account. And then after that, we can move to the loan account. I'll prepare the bank account last because we need to first see what is in the other accounts before we prepare our bank account. So it should come last, okay? So let's move to the partner, the loan account. Let's move to the loan account of one of the partners. Let's move to the loan account. That is loan account. Wanda. That loan was coming from Wanda. So we have to see how they are paying or how they are settling off this loan for Wanda. So of course we start with the balance from the statement of financial position. We see there is a balance of 15,000. So we have balance brought down for 15,000. Then we see that this partner is taking over a motor vehicle as part settlement of his what? Part settlement of his loan. So we come here and write realization. Remember, the credit entry was made in the realization account. Let me take you there. Yes, credit entry, assets taken, loan account, Wanda, 14,000. So now we are just completing double entry. So here we have 14,000. So they are telling us that as part settlement of his loan, as part settlement of his what? As part settlement of his loan. So meaning that, of course, Wanda received the balance of how much? Of 1,000 in cash. Yeah. So that because that loan has to be settled. Okay. So we have that. That is our loan account. That is our loan account settled off. Zero balance. Then of course they also want us to prepare the payables, what the trade payables account. That is our part E. So part E. The trade payables account. Let's prepare this. The small account. So here it's just double entry, knowing what to debit and then what to credit. So it's a liability with our normal credit balance brought down of how much? Of 23,500. Of course, there was a discount received. We computed that discount somewhere on our first page. That discount was 1350. 1350. Then we also see that one that took over shillings 10 million. So we complete with our double entry. Can write capital account. Yeah, and of course the balance was paid by what? Was paid. So how much was paid? Let's try to find out how much was paid. It's just a matter of balancing up this. This is 23,500. This should also be 23,500. How much is the balancing figure?
1 to 150.
Our balancing figure is 1 to 150. 1 to 150. So that is our trade payables account. Now finally we can move to the business bank account and then we see. So let's move into the business bank account. Business bank account. So let's prepare the business bank account or the partners bank account. And then we see. Remember, when you're preparing this bank account, it has to balance. The debit should equal to the credit. If it does not balance, then of course you have to check your work. So partners bank account. So let's do this. Then complete our so This is our debit. This is our credit. So we start with the balance brought down. Of course, it's credit. Why? Because we see that they have a bank balance under the current liabilities. So this represents a bank overdraft. So I'm crediting the 4,000. Then on the debit, we have to show the assets realized. That is from the realization account. So complete double entry, check the assets realized amounts. We have land and buildings. How much was received from the disposal of land and buildings? That was 90. Plant and machinery, we have 45. Then inventories,
28.
we have 280,000. Then what else do we have?
Receivable.
The receivables, yes, they were factored. And we have 23,550. On the credit, of course, we have to show the dissolution costs. Dissolution costs were 3.5 millions. Of course, I read 3,500. Then what else? Now we can look at Wanda also clears up is balance, half of the balance. So we have capital account. Wanda, how much? That was how much? 3,850. Let's try to check that. Wanda paid some money. 3,850. That was 3,850. Good. Debit that we are receiving. We paid the trade payables. Don't forget. So we credit.
But that was not Wanda.
That was who? Karule.
Mm.
Oh, okay. Thank you. That was Karule. Okay. Something we can update here. Capital account Karule. Okay, trade payables. We settled off the trade payables. How much do we pay? Trade payables. Check your trade payables account. That was 12 of what? That is 12 of 150. We settled off the loan of Wanda. And we paid 1,000 because he took over the motor vehicles valued at 14. Yet the loan balance was 15. So we paid Wanda 1,000 to settle off his loan. Then what else? I think that's it all. The only thing now we have to bring in are the capital account balance, the final amount to be paid to our partners. So capital account, that is who and who. That is Wanda. And Karoli. Can you try to find out how much we paid to Wanda? Check your partner's capital account. Wanda 107,842. Have you seen that?
Mm.
107 842. What about Kalule?
61
61
908.
61908. So that's it. Now we need to prove the entries we have made. Remember, the business bank account, the debit should equal to the credit. If that is not the case, then of course there will be some mistake somewhere. So let's try to see if the debit equals to credit. So add up, then you give me your totals, both debit and credit.
The same.
On the debit, we have 190.
400. The same on credit.
We have 190, 400. And the same on the credit. So that is partnership dissolution. Question practice is very key. You have to practice. So there is that question from November 2016 in the revision kit. Kula, Kulipa, and Kujenga. You can try it out. Then you also try out those other